Hey, it's Dan with Day Trading Buzz. One of the most frequent questions I hear, and perhaps one of the biggest frustrations new traders deal with: where do I enter and exit a trade? The answer is not always obvious, and often depends on a trader's skill and the setup. But one method and tool you should have in your arsenal to use in conjunction with other trader tools is trading the VWAP. There are many indicators that traders can use. In my opinion, there is none more valuable to a day trader than VWAP. When I say day trader, I'm referring to retail traders that trade volatile stocks. Not Microsoft or IBM that hardly make any moves during the day, but stocks that make big intraday moves. So what is VWAP? VWAP stands for Volume Weighted Average Price, and it's exactly like it sounds. The average price weighted by volume. VWAP equals the dollar value of all the trading periods divided by the total trading volume for a current day. If you have watched other videos on VWAP or read books on it, you may be a little confused. It's important to understand that different types of traders use VWAP for different reasons. VWAP was often considered a tool used by hedge funds and institutions. When these hedge funds or institutions want to enter or exit a trade with large size, they normally would like to trade around the VWAP to have their trade make the least impact and to assure that they got it at a good price. For long-term investors, they often look to enter a trade below the VWAP. They do this so they know they got a better price for most traders for that day. But these methods are for long-term investments and not for trading volatile stocks. For a day trader, VWAP becomes a great support and resistance level. It allows traders to understand where the real average price is for the stock for that day. When you're trading with volatility, you could have large spikes up on low volume, where a stock may have gone up 50%. It may have only gone up 50% on 5% of the volume. So the actual price on that spike does not provide an actual picture where the average price is. Knowing the VWAP price, you have a much better understanding of where most other traders stand. So let's take a look at what VWAP looks like on a chart. Have you ever seen traders' charts that look like this? They load up their charts with as many indicators as possible, and before long it just becomes confusing. Look, I'm not knocking it. If it works for you, then fine, that's great. I've been trading for many years now, and even I find this completely overwhelming. So I can only imagine what new traders think. Now, I will occasionally use a 50-day or 200-day moving average, but I like to keep it simple. For most day trading charts, I stick to the VWAP on my 1-minute chart, and I also watch major support and resistance levels along with the trend lines, which I will go over in detail in a separate video. Trading is ultimately a game of trader's psychology. Understanding how other traders will react to price levels helps you to identify where to execute higher odds trading setups. The trading world is actually very sensitive, and beliefs can be easily changed by influencers. Just a few years ago, few traders ever mentioned VWAP. Now it is highly respected, and the average trader will react to this level. The more you understand what other traders are watching while trading the same stocks that you trade, the greater advantage you will have. Since I know the average trader is not watching all these other indicators and they are focused on VWAP, I will ignore all these other indicators and only focus on VWAP. I grabbed a few charts from stocks that were moving today and over the last few days. I did not cherry pick them, I just grabbed them at random to see exactly how these stocks reacted to the VWAP. The first chart we're looking at is BKD. You can see there was an initial spike here. This was caused by the catalyst. When you have the catalyst, the VWAP can be irrelevant during the first spike. Where it matters is when it starts to pull back. The red line here is the VWAP. You can see the stock spiked up and then pulled back. Did not quite get to the VWAP, bounced back up. Now, for any trader who was entering a short position right here, their ideal setup would be to short on the lower high and then cover on support. VWAP acts as a support when you are above the line. So you can see it came down and it touched VWAP and it held VWAP and then bounced. So if you were to short, you would want to cover here. And if you were to long, you would want to long here. As long as the chart stays above VWAP, it is bullish. When it is below VWAP, it is bearish. Here's one chart of ETRM. You can see the stock had a weak open, and when it started to bounce off this level here, if you were to long it off this bounce, you'd want to know where to sell. As you can see, it is trading under the VWAP. Stock came up and it reached VWAP, and once it hit VWAP, it pulled back. So if you were longing it here, you'd want to sell at VWAP. VWAP is now resistance. Now you can also see it held under VWAP and then it made another push towards VWAP. Once the price broke VWAP and held, it then becomes bullish. If you were to buy the stock, you'd want to buy it here once it held above VWAP. VWAP now becomes your support and ultimately a line to draw for your stop loss. And as you can see, once it broke above the VWAP, It became bullish and stayed above VWAP until later in the trading day. Here's another chart on ETRM from a few days ago. You can see early in the day, the stock spiked up, and then when it pulled back to VWAP. VWAP held as support, and as long as it held at support and did not break, price spiked up again. You can see multiple examples of where the price came down and held support. It spiked up, and when it came back down, it tested VWAP again. Once it breaks a VWAP, you can see you have a pullback. The price becomes bearish, and then once again, when it tries to reach VWAP, VWAP becomes resistance. Here's a third chart of ETRM. The stock was very active over the past week. You can see through the trading day, it traded above VWAP for the entire day, but you can see on several examples where it came back down and tested VWAP, held, and then moved back up. Came back down, tested VWAP, held, and moved back up. VWAP becomes support. Here's another example on FCSC. See here where it pulled back to VWAP, held. Here's a chart on GNVC. You can see the initial spike up off the open, came back down, tested VWAP, spiked up, lower high. Came back down, broke through VWAP, bounced, and now VWAP became resistance. Could not break and hold above VWAP. Here, ideally, is where you'd want to short with a cover on break of VWAP. As you can see, since it did not break and hold above VWAP, you had a large pullback and it trended down. Later recovered some, bounced back up to VWAP. VWAP continued to be resistance, could not break above it, remained below it until it actually did break above it. Once it broke above it, you can see where it spiked. Came back down, tested, held. These patterns continue over and over. If it holds VWAP for resistance, it stays below. If it holds for support, it stays above. If it breaks resistance, it becomes a breakout. If it breaks through support, it becomes a breakdown. Here's another chart on SGNL, SRPT, URRE, and XGTI. Here on this chart, when you add additional support and resistance lines along with the trend and the VWAP, you can get a better understanding of where traders are potentially buying and selling and causing the price of the stock to move in the opposite direction. It is best to use this information as a guide to make a more informed trade, but never believe blindly that the price must obey support and resistance levels. There's always potential for other catalysts to cause the price to blow right past any support or resistance level. I hope you found this video helpful, and if you have any questions, please feel free to contact me at dan@daytrading.buzz.